Hello, everyone. It's not time yet, so we shall wait for the others to get in. Then we will start our sessions right away. And today, actually, we will go through all the trade calls, or not a trade call, a trade suggestions that we have been giving out for last 3 weeks. And then we will see how all these trades go, good or bad. And then yeah, let's see how can we improve from this and what is the factor that make us profit and what is the factor that make us lose. And we shall wait for the time and we will start on 8 p.m. sharp. And all of this is actually assuming that if you just leave it without doing any what we call a trade management. So if you do have a trade management, you can actually control the losses and maybe you can, partial take profit if you have more than one positions. So since this is just for the illustration purposes. So if you are the type that just leave it and without doing anything, then actually this one can be a reference to you. So even though you will see some options that go to zero and become no value at all, actually we can actually do something to control the losses. This is what we call a trade management. If you cannot hear my voice or if there's any problem, do let me know, yeah. Means while we are waiting, maybe we can just take a look at this first. So actually, I'm giving out one suggestions each day, and we will take some rest on Wednesday and also some public holiday. So actually, this is the all the trade that I've made for last 3 weeks. And the maximum profit and maximum losses here is based on the fact that if you just leave it without doing anything, which is without any trade management. So if you do take partial profit or if you do, cut losses, then the result will be even more beautiful when comparing to this one. So actually, this is a very good idea to just journal your trades along because if you don't journal, you won't know that what is the reason that make you lose and what is the reason that make you profit. For me personally, actually, I will do all the trade journaling, including the options, the shares, and also the futures, and even the CFD. So actually, I do the journaling for every trade that I've made, so I can know that what is the strategy that will make me profit, and what is the strategy that didn't make me any profit. And I can just abandon the useless one and then adapt to become better and better. So if you do trade for gold, you can just check for the recording for last week. We have to go through the gold analysis, and that is my way of doing analysis. And actually, it bring me a lot of profit. And if you do hear about some other things like problem, it can actually help you to just accumulate your wealth. But personally, actually, comparing to CFD and option and futures, I prefer options more because it allowed me to have the room for my mistake, the room for my the room for tolerance. So it's a game for the time and the space. So I don't need to have a very tight stop loss on that. By the way, if you do find that I miss out some trade here, it's because this is the trade analysis that I have made by myself, and there's also some call that is given by the others teachers or lecturers, and those are not in my recording, so I don't have the data for that. And actually, for my personal portfolio, it will be even more better. It will be even more prettier when comparing to this one, because this one is due to the job restrictions. I have to write for the options that will be expiring on within 2 months. So actually, for me myself, I would like to play the options that last longer, like expiration date for half years or even 1 years. So the time depreciations will not be that much, and my profit will become bigger. The reasons of why we are restricting to have the option strategy within 2 months is because if we, first it will be even more cheaper when you're comparing to those have a longer expiration date. And second is that the liquidity that trading is even more higher when you're comparing to those. So higher liquidity and a cheaper price to trade with. But personally, I think that the expiration date longer than at least half years is even more better. So you can just ignore the time value itself, and the gain will be even higher. 3 more minutes, then we will start on today's sessions. If any of you have any questions now, actually we can just have a very easy sections before we start and maybe some discussion on the stock if you have any questions on maybe your positions or any stock that you are planning to get in and you're still waiting for a chance. So it's about the time. So let's get started on today's sessions. So in today's, we will talk about the title is a bit wrong since I think that 2 weeks option strategy is too less to cover. So we will just go for 1 more weeks, which is a total of 3 weeks option strategy to cover. And you can see that actually there's some green and some red here, and then never mind, we'll go through that all together and we will see how actually we do the analysis and how do we get into the positions and why this kind will bring me a very green profit and why all those will go to zero at the end. So actually, I normally do not have the positions that will go to zero because we actually will do a cut loss on those, but it depends. So if you don't want to do a cut loss, it's also okay. It depends on the amount that you put into. And why are we doing all of this analysis? So the first thing first is we need to understand the trends. So understand the trends can actually give us a higher winning rate and a higher risk to reward ratio. So you can see that actually the above is all the call options. So it's expecting the stock to go up and the below is all the put options. And we'll go through it bit by bit and you can see that actually at a very quick glance so that you can see that all the put options actually bring you higher profit when you're comparing to the call options. It's because the general trend in the market is moving down, as simple as that. So actually understanding the current trend, not just the respective stock but the overall market, will actually help you a lot in your decisions on what direction I'm going to trade with. And the second thing is the goal that we're doing this is to identify what will work to bring us profit and what doesn't. So we want to make sure that our skill are able to replicate. So all the trades are able to duplicate again and again. We can just make the profit again and again. So we are not here in the financial market to gamble. We are not putting our money into the casino, but we are trying to make one strategy work and it will just keep on generate the profit for us over and over again. And then we can just keep on collecting the money from the market itself. So it's very important to identify what is the factors that will make you profit and what doesn't. Eliminate the things that will drag you down and adapt to whatever that will make you profit. So the third goal is to learn from the mistake. So even the saints will make a mistake. So we are trying to just become better. We're trying to just learn from the mistake and then avoid doing that the next time. Even though we cannot make sure that we have 100% winning rate, but we can do our best to just increase the winning rate and increase our trade management. So let's see. The first one is let's go through the trade performance in the overall overview glance. So for everyone that might not be familiar with this table, so I will just explain the table bit by bit first. So to let you have a easier understanding on what this table represents. The first column here is actually the date that we call for the strategy. Like the first one, we actually call to buy a Billy options, the Billy options on February 10. So the second one, February 13. So and so on. And the latest one will be on March 7, and we call for put options for PG. So the first column is the date. Here comes the second. The second one is the relative stock that has been called. So actually, we will do the option strategy with different assets on every day. The third one is the respective options. So you can just check on the first one is the expiration date. Like we call to buy the Billy options on with the expiration date that is going to expire on April 17th, and the strike price is 18. And this is a call option represented by the last letter in the option chain. And this is the price when it is being called. So this is considered our entry price when we are doing the trades. And comparing to the stock, actually options is very volatile. So this is the highest point and the lowest point that it has been through in the 3 weeks volatility. So even though in 3 weeks, it can go up a lot and drop a lot. So this is what makes it different when comparing to a normal stock trading. A normal stock trading might not experience such a roller coaster volatility, but in the options, it happens all the time. And with the highest point and the lowest point, we are able to calculate the maximum profit and the maximum losses together with the average performance. So actually, you can just take a look at these, and you can see that I actually just separated it with the color. Let's see what is the best options that performing during these 3 weeks. The best options that performing is the BAC, the Bank of America. So you can see that the put options here is going to expire on March 28 with a strike price of 45, actually performing the best. When it's being called, the entry price will be on $1.07, and the highest point that it's been through is $5.40, and the maximum drawdown will be falling to only 59 cents. So when it flipped to 1.70 to 5.4, they will make the maximum profit a 400%, which equivalent to a 4x flip when comparing to your original cost. So this is actually the best performing trades for the last 3 weeks. Actually, we have some better trades that has been called like a short in the Tesla, but this is a longer trade, so it's not a recent trade, so we are not doing the analysis for that. And what is the worst performing trades? The worst performing trades will be the Home Depot, the HT call options that have been called on February 14, and with the entry price on $14.65, and it has been dropped to 0.27 now. So you can see that actually all the options will go to zero with no value at the end if this is not in the money. And you can see that the maximum losses here is equivalent to losing all the costs that you have been buying on the options. So this is actually the benefit of trading the options, because the max that you can lose is the cost that you have putting in at the beginning, while the maximum profit can be a 2x, 3x, 4x, or even higher, like 10x, 20x. It's just that do you have the ability to catch the bottom or not? So let's take a look at the overall average performance. With the overall performance here, you can see that actually we are in profit. In the overall, we are in profit. So we have the average profit of 117%. Meanwhile, the drawdown, the maximum losses is negative 49%, which brings us around 68% in profit for the overall portfolio. But actually, we can make it better and better just with the trade management. And we will go through the losing trade later on. So let's go through all the winning trades all together. So we are not here to gambling. We have to find the reasons behind the trading world, and then we will have to make it happen and happen again. Make all those winning trades happen and happen again. Let's see how we win these trades. So these three is actually the best performing trades that we have been called. The first one is Apple, and the second is BSC, and the third one is the Costco cost. So with the price that have been called, the Apple have flipped for a 3x, and then the BSC have flipped for a 4x. Meanwhile, the Costco has flipped for a 2.6x. So we will see how we do all these analysis at the beginning, and why do we enter the trades? Why do we call this trade? So we can just make that happen next time. Let's go to the first case, which is Apple. I hope some of you guys buy this, but not now, but previously. So this is the Apple chart when we're doing the analysis. First of all, there's no higher low. So the probability of ranging or shift of structure will increase. So with a very healthy uptrend, you need to have a higher low and a higher high all along. So now this low is having the same low as the previous one. So this is not a very healthy higher low. So with this happen, it now didn't form a higher low. So the probability that it will ranging at the top or it will just switch to a bear market is increasing. So we are aiming to do a short. And now we need to look for the resistance point, which is the entry point for us to get in. And with here, I have pulled a Fibonacci. And don't ask me what is Fibonacci. Go to do your own homework. Okay. So although the bearish pattern haven't fully formed yet, because we didn't see any lower low or lower high yet. Everything is still forming, but combined with the Fibonacci retracement at the 61.8%, and with the previous resistance level, you can see this vertical line is where we call the trade. So when I'm calling the trade, this is located on 61.8 retracement level, and it respect to the previous resistance level. So I have full reason that support me to go for a short. So I'm looking for a short position at the resistance level, which is a very good entry for me at that time. So you can see even though it go a little bit surpass the 61.8%, but eventually it did close below and closing down below. It didn't even touch the 78.6%. So meanwhile, since I'm now betting on it, either it will be in ranging or it will be switched to a bear structures. We need to see if it respects the low or not, which is the low of 220. If it break without any rejections, then this is a trade that is able to hold for a longer period. This is exactly the same trade that we have posted in the group. So if you are not in the group, you can actually contact your designated managers to just invite you into the group. So from time to time, we will just share this kind of trades all along. And this is the Apple options chart that we have bought. So we buy the options here, the put options here, with a strike price of 240. And this is the date that is going to expire, which is on March 28. And this, did you see this little white box here? Actually, this candle itself is where we call for this trade. So actually we enter at this level, but actually it go a little bit down and then it just started to reverse afterward. So actually you have like 5 days for you to get into the positions. It's still ranging at the bottom when we are calling this. And this is what a trade that is flavor in your positions. Okay, so we have go through for Apple, and I'm still holding this trade, hoping that it will break through the previous support. If it get rejected on the previous support, then I will just exit the trade. Let's see for the second. The second is BAC, which provide us the highest returns for last 3 weeks. And this is how it looks like. So when I look at this chart at this day, which is the February 21, actually, which is this vertical line, what I see is it is actually ranging in this zone with the respective support on 41, 43, and also with the rejections level on 46, 47. So this is ranging. Ranging is very simple. You can just short at the top and buy at the bottom. As easy as that. So the higher time frame is ranging. Unable to break the range, so you can just short at the top. But I missed the top. So where do I get in? Actually, I get in here because it break the previous low here. Even though the higher time frame it is ranging, but the lower time frame itself is switched from the bull to the bear. Why I say so is because if once it break the previous support here, it has formed a lower low. There's no higher low here. So from in a lower time frame, it already changed from bull to bear. Meanwhile, in a higher time frame, it's still in the ranging mode. So this is where I get in to the short positions, and hopefully that the higher time frame will switch from ranging to the bear market afterwards, which it really happened at the end. So when I get in here at the vertical line here, because the lower time frame has switched to a bear market, and it breaks the support, a higher time frame support, without any rejections. So the higher time frame switch to a bear market also. And this is actually the second chance if you miss the first one. So you can see that actually all of these 3 circles here is the entry that you can seek for, which we have missed the first one and we get into the second one. So the third one is where if you miss the first one and the second one, you can consider the third one. But the price already went for some distance. So this is the option chart. And the candle in this bar, in this little white box here is where we get in. So we actually buy in here, and you can see that actually it did come to retest at this low. Why? It's because when we get in the break of structure here, and it switched from a bull to a bear, we get in here, and it did come to retest for this level. So when it comes to retest, the option chart come to retest too. So actually this is another chance for you to get in. But if you're able to just stick for a better entry here, the best entry, which is the top here, and you may able to get in a lower position when you're comparing to that, maybe 0.0 something. So actually you can just get in even though more earlier when you're comparing to the second chance. So this red candle in the white box here is actually our entry, which is the second chance for us to get in. And after we get in, we have a retest and it go up very beautifully. And now we are making some profit, and I would suggest you to just hold along until expiration and then you quit. But to be aware that the time value actually depreciate very quickly for the last month. So if you don't want to just risk your position, you may quit the position. So the best choice is actually not trading those with the shorter expiration date, but instead you can actually trade for a longer expiration date. Like if you get into this BSC put options, but not this one, but a longer expiration dates like half years or even 1 years, I will recommend you to just keep on holding until the chart itself have a shift of structures. So like Tesla, when we are doing the analysis there, the shift of structure there, actually we have an opportunity to short when the Tesla price is on 430. And are you able to hold until now? If you only bought into the options that is going to expire on 1 month or 2 months, then you will miss the whole rally. But if you just buy on the options that is going to expire on half year or even 1 year, then you're catching the whole drop, the huge drop in Tesla. So personally, I will recommend you to go for a longer expiration date. And the third one is Costco. When I'm doing the analysis for Costco, actually I doubt a lot because when I'm doing that, all the other stock are actually dropping. I mean, the stock in another industry like the semiconductors, the tech, the AI is all dropping. Meanwhile, this consumer itself, the consumer industry, is still at the top. It's still going up and up without any sign of exhaustions. So I want to just go to an analysis of this consumer industry itself, and I think that we'll just follow the majority, follow the whole general trend, and keep reverse at the top. So hopefully we're able to catch the top. And among the Costco, the Walmart, WMT, and also the Coca-Cola, KO, I actually choose Costco because of the higher valuations. This is the main reason I go into Costco before going to the chart analysis. So actually, you can find this on Finvit's website. If you want the name, you can just approach me after these sessions. I will leave my contact at the end, and you can see that actually all the analysts here, like Morgan Stanley, the Oppenheimers, like all the big men here, is actually giving Costco a price target like. Now this is a bigger picture. So this is all the price target that is given by all those big men, all those analyses. So you can see that the range is between 920 to 1,050. So at the time when I'm doing this analysis, the consumer industry is still going up while the other industry already start their dropping. So I go to the Costco, I check their valuations, and I see that the current price is already above all the variations that given by all these big men. So it's already achieved their target, and I think that this is a very good chance for it to have some retracement or even a reversal. And if you check for Walmart and Coca-Cola, you can actually see that there's still some distance until they reach their price target. So this is the main reason I'm looking for an entry in Costco. So still the same, we need to go through the chart analysis first. So this is the chart for Costco. And where my entry is actually here. When it's having a lower time frame, I mean 4 hours time frame, a shift of structure in 4-hour time frame, because it break the previous low and it having a lower low. So the bull structure here is no longer valid. Meanwhile, you can see that actually there is a second chance and a third chance at the begin at after that. But when I get into the break of structure here, I don't add in any position afterwards. But if you do have the opportunity or you do miss out on the first one, you can actually get in when it retraces and get rejected. That is actually a very good position to trade for it. So a lower time frame switch from a bull to a bear. Now, what are we expecting? Actually, we are expecting that the structure from lower time frame will switch to a higher time frame shape of structure. So the lower time frame switch from bull to bear. Meanwhile, the higher time frame is still in a bull. So hopefully the lower time frame trend in a bear trend will keep on changing until the higher time frame switch to a bear structure too. And why am I doing this? You can see that actually I'm actually betting on the earning report release. Why? It's because that with this valuation itself around 920 to 1050, and I do not believe that the earning itself will be a lot better when in comparing to what they are forecast. So this is a what we call a macroeconomic analysis, which everyone is dropping and they are not. This is the first trade ideas. And the second trade idea is I'm betting that the earning report will not be better when comparing to what they expected, because the price already went a lot higher comparing to what it should worth. So if you want to just keep on going up and going up, the earning report have to be unbelievable beautiful. And that chance for it to happen, the probability for it to happen is unlikely to happen, which you can just check for the surroundings, check for the peers, how the peers is doing. If the peers are not doing anything better, then how can it do anything better? So I get in here. And what is my target? Actually, my target here is I have a Fibonacci level pool and I'm expecting to just take a profit when it arrives a retracement of 61.8%. But it just went through it without any rejection. And that will become a very solid reason for me to hold my positions until it arrives the bottom around 900. And we will see if there's any rejection happen here. If any rejection happen at the bottom, then we can consider to close our position. If it just break through the 900 without any rejection, then that is another beautiful story. And this is where we get into our position. And you can see when we call for this position, the little white box here, you can see it's actually keep on ranging until recently. So it keep on ranging for 2 weeks until it bursts out. You miss a lot of opportunity to get in. And this is quite a suffering positions to hold. So we already go through the winning trades. Now we will go to the losing trades analysis. Hopefully you can learn something from it, and maybe we can just make the trade battles exit earlier or even control our size. Hopefully you learn something from the analysis. Yeah. So go back to the general view. So this is the worst. Let's see. This is the worst trading result here. As you can see, all of these actually go to nearly no value at all. Like the CRM, the Home Depot, the Tesla 2X, and also the low. And actually, do we need to go to the individual stock analysis? I don't think so. Why? It's because take a quick glance and you see that there's a very clear line that separates the call options and also the put options. And you can see that the call options are majority losing. Meanwhile, the put options are winning, have a higher winning rate and a higher profit. So we can know the mistake right away without going to the individual stock analysis. Why? It's because when the market itself is dropping, how can these call options work and reverse their way when it against the market? So actually, what can we learn here is that we need to identify the directions before we get into the individual stock analysis. So when the whole market is dropping, of course, the put option is going to perform better when comparing to the call options. So if you are going to the call options, you will need some very excellent skill to win against the market trend. So actually, at the beginning, why I'm calling a call option is because the SPY and the QQQ is still at the uptrend, I would say. But afterward, it changed from an uptrend to a downtrend. So I will just switch my bias, my suggestions to bearish. So even though I'm not able to catch the shift of structure at the beginning, at the very top, but I'm able to just switch my bias and then get into profit right away after the shift of the structure. Okay, when the whole general market is switching, I might lose some in the beginning, but I will able to adapt to the changes and then switch my bias along the way. So you can see all of the call options result. Oh, this is a typo here. So this is all the call options result, which you can see that four of them mostly go into no value at all. Meanwhile, there is one outlier here, which is Bilibili. I call for a Bilibili call options, and it's at the price of 2.44, and it go to highest at 7. So there's a 187% gain with a maximum drawdown of only 20%. And if you can get in the lower positions, then it's even better. So this is the only outlier that it goes against the market. So actually, I do the same technical analysis for all of these stocks. But why some of them will work, but some of them won't? The first is all of the call options actually against the general market, but some of them did perform well. But we actually cannot put our expectations to catch all these outliers. For this outlier to happen, the probability is way too low. So no matter how good your technical analysis is, make sure you follow the general market trend. So here come the end of the sections. Okay. So what do we learn from all of this one? Even though in the summary, in the general, we are in profit, but actually we are able to increase our win rate by choosing the right directions. So I separated all the call options and the put options to see their performance. So you can see the above one is actually the call options. So the call options actually have a higher return, average returns of 49% in profit. Meanwhile, the average losses is negative 78%. And this is actually very bad when you're comparing to a very profitable traders, because the losers are higher than the winning, But when you're comparing the put options, the put options actually do even better when you're comparing to the summary. So in the summary there, we have a average winning rate of 117%. Meanwhile, if you only do the put option itself, your winning percentage will achieve 1.5x in general. And the maximum drawdown also decreased from 50% to only 35%. So if you only do the put options, your portfolio will be at least double for now. because you can see that the average profit here is 116. Let's see, there's a review here. 干中学吧，干中说啊 I don't understand your words. 干中学，说中文吗？ Because I'm not in charge to speak in Chinese for this month. 我不是讲中文的导师，讲中文的导师有别人，所以我们会有不同的课吧。虽然我也能说中文。Okay, so the first lesson is follow the market trend, which is the general market trend. This is very important because if you pick on the right positions, then actually, no matter what is the stock that you're picking, it will increase your winning rate a lot higher. So second lesson here is the risk management. This is what you can do, like the position sizings and also the stop loss. And position sizing is what I will be focusing on because of this number, this figure will become realized when I'm putting the same money into every option strategy. So let's say I put like $100 for strategy A, then I'll put on another $100 for another strategy B. Why? It's because that I will make sure that I'm able to have a spread my risks all around. I don't put all the egg into one basket. If I have a very heavy positions in one of the stock or one of the options, what if it goes wrong and go to zero? It will burn all my profit into nothing. And that is what I want to avoid. So position sizing is actually very important. I will make sure that I have the same positions sizing in every options trades that I have made. But for the stop loss, actually it's very depends because it depends on your time, your effort, and your trade management. And this is you can do that or you can just leave it because the maximum that you can lose is the original cost that you have put into. So the worst result is go to zero. So it won't go into like a negative 2x flip, something like that. So actually, even though you don't have a stop loss, it's okay because you already have your risk management at the beginning. But if you can put on a stop loss for all these trades, then it will make your trade even better. It will make your result even better. Let's see how to do so. Okay. Like first one, CRM, the sales force. So if you hold until now, it will go to no value at all. I will say it will become a rubbish, a blank of papers. Okay. But if you do have a trade management, this is how it goes. This is the place that we call for an entry, which is actually ranging at a very high level. And this is the support that is respected for the third time. And this is where I call for a long at the bottom. And when I get into this position, actually, if you check on the chart, the second vertical line here, you can see that there is actually a break and a close below the support. And this is where you can make your cut loss happen. So for the chart itself, already have a switch of structures when we're having a bullish bias, but now the chart itself is already have a switch of structures and it changed from a bull structures to a bear structure, then why are you still holding into this trade? It doesn't make sense at all, you know. So this is where you can actually cut your losses. So if you do cut your losses instead of holding until now, then how will the result will be? Let's check on the option chart. So the option chart, this red candle in this white box here is actually where we call for the entry. And you can see that when we call for the entry, if you enter right at the market open, the open price will be 20.66. So if you get into the positions at the 20.66 and you have a cut loss when the when the high time frame structure is swift, you can see here, it switched from a bull to a bear at February 21. So let's check on the price on February 21. February 21, the closing price or even the open price for the next day is around 12.3. So instead of holding now, you're able to quit your positions at 12.3. So when you get into the position at 20.66 and you quit your positions at 12.3, and your losses will be limited on only negative 41% instead of it go to zero and nothing. So you can just keep some positions back to your hand, collect some money back to your hand. So don't let your emotion get rid of you, get control of you, not get rid of you, get control of you, and you still have the what we call the survival bias. You think that you will become the survivor. Your position, your underwater position, will still recover back at the end. So like some of the user actually having their positions at what we call underwater positions in Tesla at a very high level, maybe 300 something or even 400 something, and they keep on holding until now. And it depends on the trading method that you have used. If you are having a DCA method, which is a dollar cost averaging, then it is actually good for you. But if you put all your eggs at the very high level, then maybe you can just consider to break the positions at the sweep or structure happen, and then get into the position at the bottom once again. That will save you a lot of principal, a lot of cost, and even the best thing is you can sleep at night very easily without have to worry your life, worry your positions at all. So if you do so, when you spot the swift of structures, this is what you can do. You can actually quit these positions, and the CRM result will become negative 96%, will become negative 41%. So you actually limit your losses at 41% instead of this whole options contract go to nothing, go to no value at all. And we'll go into the second case study, I will say, Home Depot. Let's see on Home Depot. So Home Depot is actually very interesting because from the chart itself, you can see that actually it's respecting this low, and it have a break of structure here happen, and then afterwards it makes a support, a very solid support, which it respected for 1, 2, and 3 times. So I get into the positions when it respected on the 3rd time, when it's standing on the support. Where you can see I get in on February 14, which is this vertical line. So when I get into this position, I'm hoping that this support will stand still and it will get respected. But what happened is on the next day, it break and close below. So you can see that this is already a switch of structures. So actually, you can just quit your positions after the 2nd day close. So you can just quit on the 3rd day. And so you won't hold until now, and the positions go into zero at the end. Be rational to all your positions and your trades. Don't trade them like your friends or your lovers or your family. They are just a game of figures. They are just a game of numbers. Let's see on the option chart itself. When I'm calling this one, it's on February 14th, Valentine's Day, a very great Valentine's Day that make me lose at the end. So when it opened, the price is on $17.56. So I get into these positions without any second thought, even though it go to the highest at the day with a profit like 18.3, but I didn't quit because I have a higher ambitions, a higher goal instead. And what happened is the 2nd day, if you remember, The second day, it break and close below and having a switch of structures. So this higher time frame has changed from a bullish to a bearish. And this is what we do. So the second day, it closed below. And I don't have the chance to get in because I wait for the candle to close. So I'm able to quick on the third day. When the third day open, I exit the positions right on the open price, which is $7.50. So if I still holding until now, it will be worth like maybe 20 cents, 14 cents, something like that. But since I'm doing the cut loss thing, I actually limit my loss to negative 57%, even though it's a very huge drawdown. But first thing is, I didn't put all my egg into this one. I didn't put all my egg into one basket. I spread around. So even though this one go to zero, it doesn't affect my portfolio a lot. And now when I'm doing a cut loss, the effect that it plays is even smaller, you know, which I doesn't feel any huge drawdown, a huge depression from it. So you can see that from if you're still holding until now, you'll be a drawdown of 98%. But right now, the drawdown has become negative of 57%, which I able to collect the remaining 43% back into my pocket. And hopefully, if you put all your egg into this basket, you're already losing all your money into the call options, then you won't have the chance to participate at the put options strategy. So make sure you have your bullet safe, and then make sure that you have the second chance, the third chance, and even more chance is even better. So this is what we do. The first lesson we learn is follow the market structures, the market general structures. We have to follow the correct direction, get the correct directions. And the second lesson that we learn is having a stop loss can limit your losses. And the third lesson here, journaling, which is what I'm doing right here, right away. I analyze my win and my loss so that I can know that what goes right and what goes wrong. Why we are doing a journaling? The first thing first is identify the patterns. Why I'm saying so? It's actually to help me to analyze which strategy are working and which is not. And it reveals the trend in my decisions making, which do I exit too early? Should I make a cut loss or should I just hold? Is there any break of structures without any rejections so that it supports the reason for me to hold until now? This is all the things that we can spot from the trade management. So actually we have to go through every trade. We have to go through the winning trade and also the losing trade, so we can see what can make our portfolio even better. So this is the first reason why we are doing a journaling. Identify the winning and losing patterns. The second is improve the decision making. So by reviewing all of these past trades, I can actually make a more informed choice rather than an emotional choice. So I won't do such thing like I rush into the market because I lose in my last trade. I have the solid reason to back on every trade to help me to get into the positions. So by reviewing all of those, you can have a more rational mind, a more informative choices for you to make before you get into the positions. And it will reduce the what we call a formal or a revenge trading or even impulsive tradings, and it will help you to just stick to your plan, your strategy, your initial plan. If your strategy is actually working, it can make you a lot of money, but you didn't follow it and you lose at the end, then it will be such a waste to do so. And the third point is hold you accountable. What I mean hold you accountable is journaling will actually force you to justify every trade. So you will not get into the position based on other advice. You have your own analysis, and you will not be based on purely like rumors and maybe a president say one word and then you will get into the position right away. That is what we call a very uh emotional decisions. So we need to, when doing a journaling, you will just justify the reason why you get into the trade and why you just manage the trade in that way after the trades, after the executions. So what it will help you? It's actually will help you to eliminate all the excuses. So in the next time, you will you don't have the chance to have any excuses and it will keep you disciplined in your trading. And my personal advice is actually journal down every trade that you have made, even though it's not the options, it's a futures, it's a stock, or even a CFD. Journal will help you a lot. And let's see on what is the next one. Build confidence. So we can build confidence over time. So seeing a record of a very successful trade will help to boost your confidence. So sometimes when you are lack of confidence, even though you are doing a very good analysis, a very good technical analysis, the macroeconomic analysis, but you don't have the confidence to click on the last button to get into the position, then that will be such a waste to do all of the efforts. So confidence is very status is very important when you are making any decisions, either to get into the positions or to just quit the positions. So yeah, so keep on journaling will help you to build your confidence because you know the result of the expected result, but this is what we call expected numbers, and you know the worst that can come to you, and you know that your winning rates, you know that what are you doing. So even losses will become a very valuable learning experience to reduce your fear and your hesitations when you are doing a trade executions. Let's see what is the last one. Adapt to the market conditions. So actually journaling will help you to adapt to the market changes. So you can see that how this different strategy will perform in different environment. Like right now, the general market is in downtrend, so all the call options die. Just like what my previous call is, but except the Bilibili did pay me a good result at the end. But that is the only one outlier for the call options. And it allowed you to just adjust my approach very quickly. So when I'm doing the journaling and I see a continuous losses in the call options, then I'm knowing that the market itself is actually giving me a signal in advance. It's going to switch, but the market structure haven't switched yet, but the market sentiment already switched from a bull to a bear. So by journaling, you can actually spot all of these little signal in advance, and it can help you to adapt to a new market changes, a new market conditions very quickly. Or not in the first time, not in the first minute, but you're able to respond and react on the second time, or what we call a second minute. So 3 lessons learned. First one, choose the right directions to trade, call or put, according to the market direction. Second, you can manage your trade. How to do so? You can quit your position, which is what we call hard loss, when the market structure has switched. And the third one is journal down every trade that you have made. And I won't repeat all against all the benefit. So this is the 3 lessons that we have learned, and I hope you learn too in the last 3 weeks performance. And if you're not in any group, and you can just contact your designer managers to get you into one of those groups. So in those groups, actually, we will just post all of the option strategy every day. And you can also, if you are a pro member, you can also check it in your app. And there's a a redirect link in the suggestions list there. So once you click into the redirection link, it will just redirect you right into the option page, and you can just make the trade directly. So if you have any questions on either the options executions or what button click and how to do the math and what is the opinion on the market, what is the individual stock analysis, if you have any doubt on your portfolio too, you can actually contact me. And this is my contact in the Telegram. And I will also share my contact, which is officially used in VCOM. And I will just reply you when I'm free. So this is for the VCOM and VChart. If you are using VChart and VCOM, you can add me. And then I will just, if you have any financial problem or even a psychology problem, you can just come to me and then we will solve that out. And this is the latest Telegram group that we have formed. And we are not sure how to run it now, but I think that in the future, it will be very good place for us to analyze all of the things together. And if you have any trade questions in trading itself, you can just post there, and then hopefully the community itself will help out each other. So that's it for today, and let's see again for. And this one, the last let's take a look at the overall performance before we end the sessions. So this is how our last 3 weeks going on, and this is the just in case if you just leave it without doing anything. If you had the trade management, it can be even more better, even more beautiful comparing to what the figure shows. And I do have a sessions on Thursday. I will talk about options, but it will be in a very simple sessions that we will talk in how I do all these analysis from macro and to the short-term catalyst, the triggers, and how do I do the technical analysis and the fundamental analysis and also the valuations estimations. And yeah, afterwards we will go into the practical way of how to actually place a trade into buying options. That will be the class on Thursday. And thank you for joining. I think our session will end right over here. Thanks for everyone.